What is going on, guys? Welcome back. My name is Frankie Candles, and on this channel I show you how to make money trading crypto, whether the price is going up or down. And in today's video we're going to be talking about trading psychology. So we're going to be talking about things like controlling your emotions, having discipline, and the importance of having a trading plan so you can avoid having your emotions control your entries and take profits. And if you guys stick around to the end of the video, I'm gonna show you how you can practice trading without risking any of your money or very little of your money, so you can get in the game, start trading, start to feel what it's like to be in a trade and what it feels like when those emotions start creeping up. And I'm gonna tell you how you can try to control them. Let's get into it. Trading psychology is the most important thing when it comes to trading. You can be amazing at TA. You could be the best at reading the charts. You could have your thumb on the pulse of the crypto markets as much as you want, but if you have bad trading psychology, you're gonna wind up losing money over time. So the first thing we're gonna talk about is emotion. I wanna be clear when I say this. Emotion has no place in your trading strategy. When you trade with emotions, you find yourself in situations where you may enter a trade and it starts to go in your favor. And the second you see a little bit of a red candle, or it looks like price action is starting to reverse, you get nervous, those emotions creep in, and you decide to take profits too soon, or sometimes even at a small loss. This is not what you want to do. When you trade, you want to have a plan. Now, this is different from a strategy. I'm not talking about strategy. I'm talking about a trading plan. Why are you trading? What are you trying to do? Because a lot of people get into trading because they have this dream about sitting on a beach with a laptop making millions of dollars, just lounging around drinking pina coladas, and that's not the case. A lot of those people are in it to get rich quick, but there's a lot more to it. On this channel, we're all about having a long-term trading plan, taking things slow and steady, and getting consistent gains over time. Something that can help you keep your emotions out of your trading game is to have a set amount of money that you're willing to win or lose on any given trade. For example, let's say you're looking for 10% gains and you're only willing to lose 5%. If you have these parameters set before you start trading, you're gonna be able to keep your emotions out of it, because when you enter a trade, you're gonna have your entry and you're gonna have your take profit set, and you're not going to take your profits unless your take profit gets hit. This stops you from doing things like staring at the 1 minute chart and watching every green candle. Oh no, you're gonna get a red candle. You start to feel that emotion, but you're not worried about it because you're just waiting for your take profit to get hit. You can set the trade, and if it hits your take profit, great. And if it doesn't, you know you're only gonna take your 5% loss that you already set. Now, you might still feel the emotion, but if you have the discipline to not take profits early or get out of your trade, this can seriously help you stick to a strategy and make money over time. Another quick tip is only trade with money you're willing to lose. You get to set your stop losses, so you should know how much you're going to lose before you even enter the trade. And if you're okay with that number, you're on the right track to eliminating emotion out of your trading plan. Now, most emotions that traders feel are fear and greed. So not only if price isn't going your way, are you gonna feel fear that, oh no, my TA was off, I might have been wrong, the market's reversing, and you might pull out early at a loss, only to have the price action go back up and you're like, ugh, I should have just stayed in the trade. I should have listened to my trading strategy. But this can also work with greed. You might be way in the green on your trade and you might just take your take profit off just to have it ride up a little more. Oh, I think it's gonna go past my take profit. So you're moving your take profit up and you're moving your take profit up. And what happens a lot of the time is you never wind up taking that profit because price will reverse a little bit. You think it's gonna go back up and it just continues to go down and you pull out at a loss. Now, something I suggest to avoid this from happening to you is once you're in profit enough where you can move your stop loss to at least your entry point, if not into profit, that's a way you can lock in gains while also increasing your profit. Another way you can help eliminate emotion is understanding and accepting that you're not gonna win all your trades. You're going to be wrong sometimes. If you look at a longer time frame and you see that you're in a downtrend and looking for shorts, you need to understand that if you're in a short and the market reverses and you get stopped out, what a lot of people do is they try to revenge trade and they go, oh, I'm gonna get the next short. I'm gonna get the next short. And you keep trying to put these shorts in and they're almost in disbelief that the trend is reversing because they're so hung up on the fact that they see the downtrend, their TA is telling them it's in a downtrend, and they're just keep looking for those shorts. You need to be able to take a step back and see, is the market actually reversing? And you need to be able to make these decisions quickly so you know when to switch from shorting to longing. So we've talked about emotion and how it has no place in your trading strategy. We talked about fear. We talked about greed. The emotion's gonna get you whether it's going up or down. You just have to be able to recognize when those emotions come in and learn to ignore them and stick to your strategy. Now let's talk about how you can practice this, get a taste of what these emotions are like without risking a ton of money. So one way you can practice trading without risking any of your money is to paper trade or use a demo account. There are some exchanges out there that offer paper trading, which is essentially just trading with fake money. I would recommend finding one of these exchanges. I do believe Femex does it. Get on there, fund the account with some fake Bitcoin, and get in there and get in a trade so you can see what it's like. You could run through the motions, figure out how to set your stop losses. If you don't know how to do that, you could check out my Femex tutorial, but you can get in there, get your hands dirty, try all the different buttons, all the bells and whistles, get a feel for what the platform has to offer, and enter a trade, see what it's like. Now, this could be a really good way to test a strategy or, just kind of dip your toes in the water. But there's another strategy that I think is actually better than paper trading, and that's just start trading. Take a small amount of money that you're willing to just lose. Assume that it's already lost. Assume you're gonna lose it, whether it's $5, $10, $100, $1,000, whatever it is. Get that into your account and enter small trades. I would actually recommend this over using a demo account or a paper trading account. And the reason for that is if you don't have any skin in the game, sometimes you don't really feel those emotions as much. If you have a little bit of money, at least you'll have the emotion of losing the money or even gaining the money because it's real. So I would recommend taking whatever small amount of money you can lose, getting it into your account, and just get into a trade. You'll get those emotions. You'll know what I'm talking about right away. You're gonna feel the emotions, but try to be disciplined and just stick to your strategy, set your take profit, set your stop loss, and that's it. Let the trade ride out. Now, if you want to take partial profits on the way up, or like I said earlier, if you want to move your stop loss into profit and then move your take profit up, that's okay because you're taking profits along the way. So just a quick recap, we talked about discipline, the discipline to take profits, the discipline to stick to your strategy, the discipline to not close losing trades too early. Trust your TA, it's gonna be wrong sometimes, but just trust it. If you accept that you're going to lose some of your trades inevitably and you're using money that you can lose, then you should be able to get past this. For example, let's say you start with $100 and you lose it all. I suggest looking at it this way. You paid $100 to learn lessons that you would not have been able to learn on a paper account or a demo account. These are lessons that are worth $100 because if you can use those lessons to reel in your emotions and control them and build your discipline and confidence in sticking to your trading strategy, it's gonna make you a lot more than the money you lost. Well, guys, I hope that helped you out. I hope you guys learned something. I'm gonna be making a lot more of these trading mentality or trading psychology videos because I do believe that it's the most important thing when it comes to trading. Like I said, you can be the best at reading charts. You could have your thumb on the pulse of the markets more than anyone else. If you don't trade objectively and you're trading with emotions, you're gonna learn over time. So take these tips, go open that paper account or go fund your trading account with a small amount that you're willing to lose and go learn and fight these emotions and test your strategies and start making that money. That's all I got, guys. I'll see you in the next one. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know.